Welcome back to From the Vault, a BitGo podcast. I'm joined here by Eric of Canton Network, and we're here to talk about all the amazing things that are being built and have been being built over the past many years by Eric and team. Yeah, thanks for coming, Eric. I'd love to start way back when this idea actually became a product and a vision, and what actually went into the many-year time period.
Yeah. Well, I mean, I think you have to go even back before the foundation of digital asset. A number of people have been involved in crypto for a long time. I'm lucky to have been around the space since around 2009, 2010. And I don't know, I as a flaw, I think as a personal flaw, I always rejected the payment narrative. I just thought like it was not a very good payment vehicle, Bitcoin itself. And so I was always kind of looking on the periphery, like, okay, but if this became a new means of interacting with people, what would that be? And in 2013, I was part of the founding team of Composability and TRW. And we had this dual mandate to, market make the coin, but also to invest in stuff in the space that expanded access and liquidity. And that was really like, well, the institutional side of crypto was very underserved. Even today, but especially back then.
Yeah.
And so it's always been in this concept of, okay, a network. That was always the idea. That was always the destination. Even all the way back in 2014, when we started digital asset, the idea was one big network for moving value around. We were just thinking above and beyond native crypto assets. The big delta is how we came to market. So I think the vision has been super consistent with crypto native, with all the public blockchains. But the rest of them came to market retail first, and they're working their way, what I say, like outside in. And I don't take anything away from that. I think it's a noble approach. Again, rightly or wrongly, we were a little bit more pragmatic. We thought, well, if we work on the inside out, we'll be able to validate the tech definitely works for those institutions, and then we'll be able to grow outward or push from wholesale to B2B2C out to P2P. And that's really where we are in our inflection point, is that we've built enough B2B wholesale ecosystem that it was time to start to push outward about. But the goal has always been, the destination has always been one big public network.
Yeah, it's a funny thing because I've also been in the space for 13 plus years. You've been longer than me by a significant margin, which is saying something. But the adage was always, the herd is coming. Like, Wall Street's coming. And at no point until very recently could that have actually happened. And we could actually manage the type of inflow and liquidity that would be required to support these giants. So while everybody was like, yeah, maybe Wall Street's starting to dabble, starting to get interested, like there was no infrastructure to support them. And you guys definitely thought about it in the right manner, which is like, okay, well, this is who we need. And they require certain things that we don't really know because we don't work in this insane system that is financial services. And so you go in there, you work with them, and I assume this is where like a solicitation or feedback period at least started, or like how
Very, very, very hard lesson.
Yeah.
Yeah. I mean, it's it's like the old Tyson adage, everyone's got a plan until you get punched in the mouth. I mean, that's very true when you come up to the very strict realities that they live in on a daily basis. I'm extremely empathetic to everything that has taken place in the past 15 years in this space, whether it's really interesting degen things that have not really gone well, or TradFi starts and stops and failures, because I think that everyone has their own context to how they will be able to come into ecosystems like this. And generally speaking, everyone's trying to find their own path.
Mhm.
They're solving oftentimes for different things. I talk about Cagney and Figure a lot. They were kind of like, oh, no, that doesn't count. That's what everyone always said about what they were doing for a long time. Or JP Coin is another one that I have to really talk about. I just don't think it's fair to apply that Puritan view to it, because they are dealing with different constraints and solving for different things than an Aave or
Right.
or a Morpho is. And I consider them all valid points of view. And if we embrace them more from what they're trying to achieve and what roadblocks they'd run into and what difficulties they've had, we would actually all do collectively a lot smarter instead of the tribalism
Totally
that comes in.
Totally agree with you. And it's just part of what this blockchain revolution is it's essentially a research project. And in the classic scientific method approach, you need to test a hypothesis and try things out to figure out what sticks, what works, what vulnerabilities exist, because you can't just know. And anybody who's ever launched a product knows that you're never going to launch a complete product at launch. It's just impossible. You have to iterate and you have to learn. So the fact that there's been, and a lot of the negativity comes from, I would say, mostly outside of crypto for people looking in, and us inside of crypto just start telling people we work in fintech rather than crypto for a short period of time, and then we're back in. But yeah, it's certainly been interesting to watch, and there's no more exciting space over the last 15 years than the space we're in.
I'm deeply grateful to have found a spot in this space as early as I did. It's been a really informative decade and a half of my life. I'm very indebted to the journey, regardless of where the destination is.
So before we go further into Canton, Eric, I want to ask how you, in 2009, like what were you doing prior, and how did you end up at the literal genesis block of this thing?
So for me, it was a trade. It was, I bought hook, line, and sinker all the misinformation of the time about, it's, private money on the internet, and, maybe you could buy drugs with it or something. Not that I was buying drugs, but it was just like, okay, this has utility. This is interesting. And, DRW had this really cool early ecosystem of people that were early Bitcoiners. One of the people that we started tumbling with, Mike Komaransky.
Yes, I know Mike Gomov.
He was one of the pizza transactions.
Yep.
So there's just kind of this coincidental early adopter ecosystem that was around DRW. So I had people to talk about it.
Yeah.
Too. That's another thing.
Yeah.
It's just
that helps a lot.
It does help a lot. Have an audience, someone else to bounce ideas off of. But not to segue into Canton in any way, but even then, I remember the things I was obsessed with in the early Bitcoin space was how to anonymize transactions and how to create holdings. And you've been around long enough to remember this, but you remember when people used to, like, we got outbid in the first Dread Pirate Roberts auction by Draper, and the whole narrative was, well, these are clean coins. They come from the Fed, so you don't have to worry about it as sort of lineage on the money. And 21E6 was out there talking about, buy it straight from the miner. You could pay a premium to buy from the
I remember that too.
Market. So, even back then, and in the chat rooms in 09, Zuko talks about this all the time, which I really agree with. Like, there was a general understanding that the true Bitcoin vision doesn't work without privacy. And really, when they say that, they mean anonymity. But regardless, the point is, if you're really trying to build borderless, censorship-resistant, government-resistant money, someone being able to walk into your house and just take it from one point is obviously a pretty obvious attack vector. So the concept of privacy always felt really missing.
I could not agree with you more. And I actually offloaded a little bit of Zcash that I'd been holding for a embarrassingly long time. Just a little.
Don't let it go. Don't let it go. I'll need the money.
Yeah. It was like I watched it go. I think it was like 2018 where it hit its previous high. But just watched that part of my bag just drift for the last 7 years. And I was like, let's just do a little bit of a favor here.
I was a pretty thick Litecoin miner in 2012. I ran, there was a lot of cloud mining that we ran a pretty interesting little operation that actually did pretty well. And I've got like all sorts of weird little communities I've participated in since their beginning. And over the years, all I've ever done is rotate everything into Zcash. Like, to me, that's the durable narrative that has really helped purchase in my mind, is that this is really what these ecosystems need, is this concept of privacy. So I've actually just been nicely accumulating, or rotating is probably a better way to think about it.
So I'll ask a question to you that I get a lot, and that's why Zcash? Why not ring signatures like Monero or another privacy-centric coin? What makes Zcash special to you?
Oh, geez, I am not qualified to answer that, but I'll tell you what appeals to me about it is that there was an opportunity and there was a time where the go-to-market for privacy was really embracing crime. And I think that what Zuko and the whole Zcash community has done really well is to represent privacy in a very sort of human way, and not to embrace the outright criminal things and the really I think they've also built a really nice foundation and long-term sustainability model around the way that they manage the emissions in the ecosystem. So for me, just like anything else, I think you come for the future, but you stay for the community.
Yep.
For me, that community just really resonates with the way I think about it.
I largely agree with you. And also like adoption. I mean, it's what actually allows something to be successful is rarely just the best tech, right? It is everything else that comes with it. And I even remember back, this was probably 2016, 2017 when Zcash first got listed on a centralized or more centralized exchange. And I think it was Gemini. And everybody was freaking out. They're like, this just proves that it's not private if Gemini is able to list this. And like back then, there were no privacy coins anywhere, right? Had to go to like Yobit.
Or mine it.
Yeah, or mine it.
I would say mine is still pretty lucrative, but I'm not in it, but I get told that fairly regularly.
Yeah, I extinguished my personal mining when my advisor at university had my own microbiology research facility, and I had a bunch of miners running there, and he knew I was doing something, but he didn't know what. He's like, your lab is drawing more power than any other lab on the floor, and we have electron microscopes on this floor and like all of these ovens. It's like, whatever you need to do, you need to stop it. And up until that point, it was like free home power and internet at my parents, then at school, and then in my lab. And then it was just like, well, if I can't do this for free, other than getting burned by Butterfly Labs and etc., but I can't do this for free, then it's definitely less profitable. But I think everyone has had very interesting journeys. And that's why I think OGs are so valued, is they just have so much experience in so many different areas.
Those OGs are my favorite.
Yeah.
Those are my favorite ones, like Belshi. That's one of my favorite in the space, because few people have a deep appreciation for how rough 2014 to 2017 was. A lot of people like to think about the FTX, like post-FTX era, as being the hardest period of time, but not even close. You had so much volatility, and I think you were already past sort of the inflection point of people really believing in it.
Mm-hmm.
So it was more like, okay, we can rebuild, we can restructure. There's a lot of junk to pick up off the ground, but I don't think there was any sort of question about the long-term viability. 14 to 17 was just purely sideways, with no volatility, no interest, no demand. That was a really rough period. And so the companies that came through that or came out of that, I have a deep respect for their.
I completely agree with you. I mean, that was like my induction was very quickly losing money on GOX and then watching the price tank. And then what was 2014 maybe, when Circle first came out with their debit card purchasing option, and like it started to like trickle back, and it's like, okay, people are building, but it's definitely sad. But the thing is, it was mostly coin people anyways. So like everyone was pretty supportive, and it was kind of nice to see that aspect. I think there's less of that now. But
Apple was another one of those survivor companies.
Yes.
That was a rough period for them too. I remember there was a lot of, they were trading, they were a bank. There was a lot of, everything around business models.
Everybody just kept getting hit. And then Bitfinex, and then
Bitfinex, that's right.
BTCE.
These all came out of that era.
Yeah.
And that was, everyone was being aggressively debanked too. Like everyone talked about getting debanked in recent memory, but back then it was really.
I was gonna say it was way worse, right? I was doing some OTC trading back at around that time period, and it got to the point where like I was out of banks, and it's like you're mid trade and they're freezing your funds. You're like,
yeah, FX and sorts of.
There were a lot of really hardened survivor OGs that come out of that time frame. I have respect for all of them, whether I agree with them or disagree with them or otherwise. It's hard not to look at people that came through that era with a deep amount of empathy and respect.
Yeah. And so during that period, during your time at DRW, at what point did Canton become an idea? And then from there, when do you feel like you actually took this from, paper to code?
So Yuval was running DRW Venture, and I was a big part of Cumberland, and we had like a lot of crossover stuff because of this crossover sort of mean to not just market make, but invest in the ecosystem. And so he was always finding really interesting opportunities. And one day we sat down with Don and we just said, look, we think that there's a few key missing primitives. We don't see anyone doing it. We should start it. That was the early DA idea. That was, I think, August 2014, if I remember correctly. And Yuval and I went full-time into that not long thereafter as it started to get a little momentum. So you could argue the idea of this network of assets connected together for institutional use cases started even as early as then. We were applying it to just basic idea of like variant settlement of a lot of the existing cryptocurrencies, but our early demos right away had stuff like treasuries or bank accounts connected. And We were showing how you could start to use other assets, and the visions evolved as the tech's improved, and we went through a number of acquisitions over the years. But it's always been about a network of settling stuff. So Canton itself, I think the first white paper that we have that is specifically about what is now technologically Canton goes back to 2016 or 18, somewhere in that neighborhood. But we've been through a number of versions of the ledger over the years. And again, those hard lessons learned in working with the different institutions and what does and doesn't work in a micro scenario, and then solving for the bigger network opportunity. So yeah, maybe Canton itself as early as 16. It's probably the very first vestiges of that version of what.
And what was like the clear point where you felt like the gears were grabbing teeth? Like where you're like, hey, what we're saying, somebody's actually absorbing and is seeing the opportunity in.
Yeah, that's a great question. Because so in 2022 is when we really said, okay, it's time to really turn it into a network. We were building this kind of the way you would build a strip mall, anchor tenants, and we know at some point it will become a network, but when? And it was when those anchor tenants were starting to ask. So when like the Goldmans of the world are like, great, we issued a bond, can I use that as collateral in the Broadridge repo use case? Or, hey, who's got cash that we can use to start to settle these things? It was when we started getting those questions about the beyond my four walls, what else can I interact with in this broader ecosystem, that's when we really shifted into, okay, stop thinking about this as pure tech and recognize that this is actually a part of a network.
Yeah, I guess that's a really interesting piece there, because I've wondered this and I still don't know that institutions even have the answer, but like what was the first piece of that network that they saw value in from like an application standpoint?
The way we went to market was we said, let's solve a discrete problem for you for something you completely control.
And there are cost savings to be had there. There's no doubt about it. Like if you look at the repo project that Broadridge built, they've been in production for years now. Their customers save a lot of money from the efficiencies of blend reconciliation, no failures, they get balance sheet relief. So it solves a lot of discrete, immediate problems for all of them. But where you start to get compounding benefits are when you can connect into other systems and you stop thinking like one big vertical silo and think, how do I provide my service horizontally in our ecosystem? So it's seeing what others are doing that's starting to draw people out of their shell, and that's where that demand really came from. But it always starts with solving a discrete problem first. If you don't have that, you kind of don't have enough to get going.
Right.
And in our opinion, the real seat change opportunity in capital markets is the composition of stuff. And payments is almost always the thing that really triggers that thought. Because as long as I've been doing this, I've not seen any, maybe one or two systems that are the security and the payment. So it's like the moment you go to do the payment bit, you're reaching out to some other system.
Right.
And at that moment, you start to get forced to realize that you can't solve a problem alone.
Yeah.
And that's where those frictions are. The DTC itself, I don't care what anybody says, is a very streamlined system. It works really, really well. The problem is that it's not in a bubble. It interacts with every broker-dealer, every prime broker, every custodian that's connected to that.
Yep.
They get coordinated with the Fed and money movements there, and then the commercial banks that help facilitate that. And it turns into a huge multi-system coordination problem very, very quickly for something that looks like it's just entirely within one institution's control.
Yep.
So it's when they get past that first stage of optimization that they completely control, and they start to go, well, how do I settle more efficiently, or how do I fix this problem, or how do I coordinate one of my customer systems better with me? That's when they start to think outside of just their pure four walls. And so it's like we get these almost like the way a germ would grow in a petri dish. Like you get a little bubble over here that starts to grow, and a little bubble over here that starts to grow. And for me, the common thread across all of it is cash. That's the one that starts to pull everybody together.
Yeah, definitely.
Ecosystem.
I have several follow-up questions, but I'm worried that we're going to get too far away from one of the key pieces here, which is take me through what the Canton network is and what it's going to become.
Sure. Let me start with the latter, because I think it's easier to work backwards on this. So I may have done this to you when we first met, Jake. Like, what's the most successful public permissionless network in the world?
I mean, the two great answers I've heard, as long as I've been asking this, are the internet and the US dollar.
Okay. I would never call the internet decentralized.
But it is.
It is decentralized by few very large central entities.
The network is. Now you run into all sorts of bubbles of hyper centralized applications in the ecosystem, but BitTorrent coexists with, the CIA.
Yeah.
And so for us, the mental model of what does a permissionless decentralized network look like is that the protocol is neutral and the rails are wide open and the ecosystem is wide open. But there will be many pockets of hyper centralized permission things within it, and there will be things that are decentralized within it. Your goal is to make sure that they all coexist in the same place. I think that's what made, again, the dollar and the internet so powerful, is that it is truly a rising tide floats all boats. All things coexist in the same. So there is horrific crime being done with the US dollar at the exact same time that our core capital markets are using it. And that is one big neutral platform that a lot of people use in various different ways. So when we think about decentralization, we don't think about it along the lines of like every app has the same signature of decentralization, but the network has a universal digital signature. So Canton is a network of networks. It's not one, decentralized database, more like Ether or Bitcoin. It means that we have some entities that run very centralized systems. We have other entities that run decentralized systems, but we make sure at the protocol level, it's open to all, and that those things are always interoperable to the extent that anybody wants to use them together.
Yeah.
That's their prerogative.
Obviously, native interoperability is unbelievably key.
Yeah, that's right. And so where are we today? We've got, I'd say, kind of a budding ecosystem at the two ends of the spectrum. And what we're working really hard to do is put them together. So we've got a lot of core capital markets, trillions of dollars moving every month through things like repo and natural gas and oil settlements and all sorts of stuff like that. On the other end, we have our first KERP DEXs going live, AMMs going live. We have bridged Bitcoin, multi-sig bridged Bitcoin on the network, lending protocols. There's a lot of really interesting, more like DeFi degen stuff that's going on. And we're working to put those two worlds together, because I do think that the combination of it is what ultimately makes both sides really go. And like the most concrete example that I could give is I like to talk a lot about stablecoins, and I make this distinction between the front end and the back end of an on-chain asset. Like the front end is USDC. It's the stablecoin you hold in your rail. It's that representation of what it means. And then the back end is, well, what's behind this there? There's some cash in the account, there's treasuries, there's a reverse repo, there's money, whatever it may be. And that, like it or not, today operates at our normal TradFi cadence.
Yep.
And on the front end, it operates on a crypto native cadence. And that dissonance actually creates a lot of weird risk and problems. So when I talk about putting those things together, it's about bringing crypto native cadence and capabilities and 24/7 of blockchain to the back end, connecting it to the front end, and making it fundamentally safer, better, more attractive product on the front end. And on the back end, levering the things that capital markets are really good at, scale and the right participants, to help produce these better products on the front end. So together, I think that's a really powerful house.
Yeah, I think that's a beautiful thing. I mean, it's actually end-to-end crypto.
Yeah, I mean, not to pick on anyone, because again, I don't think any of the things that are going on are inherently bad. But when you look at the early attempts here to create tokenized stocks, most of them don't amount to much more than really a CFD, or contract for difference, a derivative on the issuer's balance sheet.
Yeah.
And I don't blame most crypto native participants for not really understanding what that risk is. But I think the symptom that you see in the network is that these things don't scale beyond the low single digit billions. It's okay to take a few $100s of counterparty risk to Robert.
Yeah.
Totally fine. Are you going to take $1 trillion of counterparty risk to Robinhood? No, probably not, right? So it's not that these things don't work. It's that they scale to crypto native levels and they don't scale to capital markets levels. And we don't appreciate as a space how much bigger capital markets are.
Yeah, this is exactly what we were discussing even before we hit record here, was just talking about how for forever, most of the crypto space, or at least the local people in the crypto space, said, we're ready for Wall Street, the herd is coming, but at no point would we have actually been ready up until maybe now. And even now, it's still looking pretty early.
It's still early. The whole thing is still very early. We're at, basis points that the capital markets are on chain today. And we need to band together and start working into the, percentage points and collectively push on this.
Totally. You look at some of these borrow venues and you're like, well, somebody with a 5 basis points allocation into a strategy through this would wipe out the entire liquidity of these 3 venues.
Yeah, that could happen pretty quickly. But
I think that's also the opportunity, right? So anyone who's discouraged because they think it's too late,
trust me, it's not too late to get involved in these things. Listen, I wear my Bitcoin orange shoes.
I should have a pin on or something. So used to being boiling in our office upstairs. So of what's built so far, or what you know is coming, what are you most excited about that you're like, it feels like it's realizing that potential?
Yeah, I mean, I am. It's such a crypto, like, not cool thing to say, but I'm so pumped about treasuries.
Yeah.
There is such a
They're getting old there.
I know, but there's such a broad applicability of treasuries. If you think about how powerful stablecoins have been,
I think you're about to see the same thing, but at more of a corporate level. Stablecoins were like this really nice way to access the dollar and then more retail entities. And of course, we use it in institutional context too. But, you look at the proliferation of Tether into all these different markets that didn't have great seamless access to the dollar. And it really has found strong product market fit there. I think you're about to see the same thing happen with treasuries. Then again, real treasuries. So on Canton, it's actual treasuries secured in the right way at the right register, not held in a BVI fund with a wrapper on top of it with kind of complex and poorly understood counterparty risks, but the real true treasury in digital form, available 24/7 to people that can access things like the DTC. I think people will be surprised at how quickly that will solve some global problems for people. And I was in Turkey maybe a couple of weeks ago, and they're just thinking like, yeah, this is incredible. We can have direct secured interest to U.S. treasuries. As I was talking to the banks, Turkey, being able to facilitate access to stuff.
Which is a wild place we live in at this point, right? That these things are regular conversations that we're having, but yes.
That's right. And it's very surreal for me at every step of the way, no matter where I am at any given time, Bitcoin context or capital market context. But treasuries have all this utility, whether it's supporting crypto native products or, revolutionizing the way just do very simple corporate treasury or bank management. And I think we'll see a really interesting wave of innovation on top of that stuff. And it'll happen fast. Similar to just like how quickly stables took off, I think it will happen really fast.
So something that I've grappled with several times and done some thought exercise around is a lot of what's being done here, or at least the original vision of what's being built here across the crypto ecosystem, is an attempt to disrupt a lot of this existing establishment and infrastructure. So as you build more crypto native products to mirror or act as these TradFi products, are you helping to keep them from going obsolete? Or is there still that risk in that maybe TVOs become worth nothing? Or, there's like full instability can happen. Like I don't necessarily think that is going to be true. When I first got into crypto, I definitely thought that was going to happen and was going to happen soon.
Well, the past 2 weeks have been wild.
The last 3 weeks have been pretty wild. But yeah, I just want to know like how you think about that. I guess you're coming from the trading side. I'm coming from a high school kid that was doing payment data obfuscation work and then was introduced to crypto. So like different level of education and experience. But
it's a good question. I think that it's a good example, or at least a more interesting example of the like false dichotomy I see pop up in the crypto space a lot, where things get pitted against each other, public or private, permissionless or permissioned, Bitcoin or treasuries. And I think that in all likelihood, these things will coexist in some shape or form. And I only get upset when people try to kind of apply the tech across purposes. So like, I don't know, kind of a hyperbolic example, but let's say someone issued a stable coin and they did it in a foreign jurisdiction. It's not Genius Act compliant, and there's just absolutely nothing underneath the stable.
Yeah.
It's just a total scam. It's a total farce.
The old tether FUD.
The old tether FUD. And then I have 1 million validators in Ethereum that validate every single USDT transfer has been correct. what risk did I remove here?
Yeah.
None. And so there's this.
In fact, he maybe created some because he created a false sense of security or certainty. Yeah.
Certainly there are people that I think may have fallen victims of that, but that's what I mean by the cross purpose, right? Like in every industry that really succeeds, the tech gets applied in a way that's additive to what you're trying to solve.
Of course.
And I think too often in the crypto space, we see the tech, or at least the religious parts of the tech ecosystem, fighting over stuff that isn't necessarily accretive. So again, maximally decentralizing the validation of a USDT transfer doesn't change the risk profile of USDT ever.
Yeah.
It just doesn't. I don't really care what anybody says. There could be $0.
Yeah, completely agree with you.
But if you have this religiousness about that tech application to things where it's not really relevant, then I think you make your life really, really difficult and you end up solving problems that don't really exist. So anyway, this is a long-winded way to say, I'm a huge Bitcoin and Zcash supporter. That doesn't mean that I think that those are the right techs for me to put US treasuries. And similarly, I think that Ethereum is really awesome for things that should be maximally decentrally validated and transparent by default. And there is a category, a growing category of stuff like that that's being invented in that space. I think that that's incredible and adequate. But I also don't think it makes sense to do payroll there.
Yeah.
So it's like when I'm being very dickheadish, like my old Tradi days or flippant, I'll say, don't build a text message system with smoke signals. Like that's very obvious to people. So pick the tech that actually works for the use case that you're trying to solve for and be a lot more pragmatic about what risk you can genuinely reduce by being on chain, and then configure that the right way. And you'll find yourself in a position where you're actually solving problems. And that's a flywheel you can build on.
Yeah. And there's many of these problems to be solved. See it all the time. And I see an equal amount of white papers still to this day where you read and you're like, what are you actually doing here?
Yeah.
I'm not sure you know what you're trying to do here because it does not match your problem statement at all.
Yeah. And again, to we'll smoke up Kanye's ass. And you look at the figure.
Mike's getting a lot of love.
They're very clear about this is exactly the problem that I solve. These are the basis points that we solve, that we improve for the holder. Here's the benefit to the investor. And they lay the whole thing out very clearly. And I think that sort of pragmatism in many ways is rejected from the crypto community. It's a little bit more fanciful and pie in the sky. And I think we need a little bit more pragmatism across the board. We get better out.
Completely agree. And so let's figure building on Canton. We, as BitGo, have, of course, taken a strong stance that we have a lot of belief in what you guys are doing. We think we want to be a key piece to everything that's happening and will continue to grow from the base level infrastructure. And in those discussions, we've been talking about apps that we might want to build and help support you guys. And I thought that'd be a good question to ask you. It's like, as a custodian, we have Prime brokerage, we have our OTC desk, borrow land, we have the staking side, eventually some additional yield opportunities that are coming soon. So like, what of that stack, I guess OES as well, outside exchange settlement, what of that stack do you think BitGo makes sense to own and launch an application on Canton?
It's an incredible question, and can't wait to have some of these. But we were kind of joking before the podcast about all those things you do off chain right now, right? Maybe a couple of those.
Yeah, for the most part, but that is in certain areas is changing. But yes,
and generally speaking, that's for good reason.
Yeah, I mean, settlement much easier if you can do it off chain. For a number of reasons. And then anything on the Prime side or the OTC side, yes, there are partners involved. Like the transactions are still happening on chain, but it's not on chain activity.
There's a lot of sensitive information.
PII and not a clear way to do selective shielding and
market price, variance of how quickly you do these things. And so, I would just start with a holistic review of, because not all of that should go on chain either, right? So what I don't want to do is like swim the pendulum and go, oh yeah, just do everything on chain. That would also be, I think, a stupid error. But you would say, okay, well, where are these scenarios where we might have a bigger business opportunity if we're a horizontal in a network, as opposed to the only way you can access this service is if you're in our vertical.
Yeah.
And so those Prime services can be very interesting at like a network level, almost like a DeFi deck sort of thing. Again, you're going to gate it with knowing who they are, whatever sort of requirements you have.
but a lot of those prime services are very interesting on chain. Some general settlement services are on chain. Off exchange settlement is very interesting on chain because you could do that very programmatically and you could do that at much higher frequencies. And all those things require privacy because you would otherwise be giving up a lot of very sensitive information about your customers. So they've always been non-starters for you before. Not all of them are clear, obvious choices. But when you are composing together money, assets, obligations, and some forward liability or some counterparty, you don't want to do it on an off system so that you can bring greater transparency to the right people, greater reliability. So those people, then that's an opportunity to put something on chain, actually enter the economy you helped create and foster and
Totally.
where it is. I get a lot of people that are like, it's almost like refinding their love for the space when they start to build on Canton and they get to think again, less like a Web 2.5 company or like a Web 3 company. Those are always really fun conversations to be a part of.
Yeah, I bet. I always, my heart always goes out to Mike because I know Mike is such a phenomenal founder, genius intelligence, father of the internet, for those that don't know. I mean, he's literally the lead author on HTTP2. Open up any browser, Mike's name, Mozilla, Google. And he's been at this one company for such a long time, and he's got that builder spirit in him at all times. So like, definitely made me think of that there. But yeah, exactly what you're saying is exactly how I'm looking at this. It's like we built a lot of this off-chain infra and things that were pretty difficult, like staking normalization, reward tracking, all of the indexer work and all of the data team and finance, like all of that stuff is pretty important IP.
Incredibly.
Yeah. And so if we can find a way to start modernizing it, I will say, which means turning it more blockchain centric with certain privacy components built in, if not fully private, like a proof type system, then all of a sudden we have something that is viable for everyone, not just BitGo, which is, I think, a much more beautiful thing.
Think if Belshi had to build a business on top of the internet and all he could do was put like a single page web app with a phone number on it so you could call him to do business. Like, think about how frustrating that would have been for him at the internet analogy. And to an extent, not as aggressive, the same thing is happening for a lot of the companies that facilitate access to the crypto world. Like, put it in this wallet, put it in this custodian, come into our off-chain system. We'll do a whole bunch of stuff over here, and then we'll just kind of produce the result out somewhere else.
I've been saying this on stage a lot lately, it feels like. But it's, Wall Street is here, institutions are here, they're absolutely interested. And they're knocking on the door, they open up the door, and all it is a bunch of rooms, long hallways, additional doors, and they have no idea what to do because of that fragmentation and that lack of proper financial services level UX, which is a funny thing to say because a lot of financial services companies don't have great UX, but you know what I mean. It should feel seamless. It should be crypto abstracted and an actual good application. And I mean, you and I both know that a large reason that has not happened yet is because we were missing so many of these pieces.
You guys were on the first horizon of facilitating a way to service customers in the space, which was to do a very traditional model on top of Mireas. The next horizon is doing more of what you do on chain.
Yes.
And when those large financial institutions that you've really paved the way for now start to come into your space, then it's an opportunity for you to move into that next horizon, you lace that next trail. And that's where, dedicated product mindset really helps prevail and produces a really durable company that's evolving in the space as it goes. Because again, just in your, Belshi being the grandfather of the internet sort of stuff, it took 30 some odd years. And arguably, I would say some of the most successful companies in the internet haven't really adopted the internet. As, appreciative as I am of everything that JP Morgan does, Chase.com is still largely an online branch.
Yes.
It's not like a Stripe or a PayPal or a Venmo. And, it's not a Plaid sort of a thing. And it hasn't really embraced the capabilities in the internet to change the business. They've just taken advantage in scale and the network effects.
I've found myself getting frustrated about those exact equations many times. Yes, it gives way for new founders and new tech to come in, but then you end up with a worse system because it's just spread across all of these different parties, and then fees are taken everywhere, and you have risk across multiple parties instead of just one, which I know, like, of course, decentralization is key here, but a unified product is how you get a unified and good experience.
That to me is why composition, like the composability elements of blockchain, are so critical. And it's one of the hills that we will die on when it comes to the features of the Canton network, is that in capital markets, you're not going to build that unified UX within a single operator. And like as this really simple thought experiment, if the ECB and the Fed wanted to have some interoperable money of any kind, what is certainly not going to happen is that they both share the same database to do that. Because now you're talking about joint governance and rule changes and also, so like that is not going to happen. So take as a just guarantee that you're going to have two databases and two steps in some process.
Yep.
So if you have composition, you can then start to put that together into a unified UX as if they're on the same database.
Yes.
That gives you the building blocks to do that sort of unified experience. And if you don't have that, then you end up in the same world that we're in today. Message linking, eventual consistency, reconciliation. You can't really build that UX. And so composition is the key feature to really, I think, preserve in this full ecosystem.
Completely agree. And it's like a dream code base, right? Where there are standards and everything's just nice and meshes. It's not like all of these modifiers and trying to
do 10 things at once.
Yeah.
I really nice.
So what are you most excited about in the near future for Canton? I mean, you guys from my seat, been hearing about you guys. Talked to Don about this in I think it was Bitcoin 2018. And so this has been a long journey. And over the past 10 months, I mean, very much aligned with the broader crypto macro environment. But over the last 10 months, you guys have absolutely exploded in terms of people paying attention. Can't go anywhere and people not ask me about Canton. And so with all of this hype, all of this momentum, what are you most excited for right now?
Man, honestly, it's just building. A lot of these things were these big events that we had to get to. We've been dealing with all these bullshit naysayers. Oh, you're not a blockchain. Oh, you're not a network. Oh, you're not public. Oh, you're not permissionless. Oh, yeah, you have a coin, but it's not traded anywhere. It's like all these sort of things that people wanted to throw at us about why the go-to-market motion invalidated what our original goal was. So
meanwhile, you guys are talking to some of the largest financial institutions in the world, and you've got
not targets co-building,
and you've got somebody with a couple ETH telling you you're doing your job wrong.
Honestly, I respect that. It's just that you have to go do these.
Yes.
There is the journey of paying your dues in the space, which I've been through in other ecosystems journeys in the past. So I think most of those things are behind us at this point, and now I think we get to really show off the deltas. And it turns up in all sorts of fun ways. Like TradeWeb talks about Canton coin, and Canton in its quarterly investor call.
That's
cool. It's not normal. Well, I mean, I guess it's normal for Sailor to do that, but I mean,
I was talking about this earlier with Mike, and it's like back 5 years ago, if you had crypto on your balance sheet, you got that off before any reporting. It was the first thing off the balance sheet.
Even Musk couldn't hold
it.
Even he couldn't withstand the pushback. But so it's just starting to turn these things online and get to. I've always been looking forward to the day that I could stop talking about Canton and I could start talking about what the people in Canton are achieving. I want to stop talking about Canton. I want to talk about those first perp dexes with privacy and dark pools. I want to talk about being able to lend your Bitcoin without everybody seeing how much you had in your account. I want to be able to talk about people doing derivatives margining at the frequencies that they should be doing it and not everybody knowing what their positions are. I want to be able to talk about these things, not just from a, theoretical or kind of relatively small audience, but I want to be able to start to steal business away from other ecosystems. Like, hey, I used to be able to watch all of the big market makers move all their money in out of the exchanges. I can't see that anymore. Why? Well, because now they're moving USDC and other stablecoins on Canton instead, and that's not for you to really know in the first place. I want those moments to really land with people. Those will be the ones that I think people, the light bulb will go off for them, and it'll all really start to hang together what this really means. So I'm just really pumped about those things that have been building and coming online for a long time, and all the pressure and the thought about, all these sort of base level L1 things to get as are behind us. And, we're going to have our trials and tribulations like everyone else has. I've always tried to be really empathetic to that because I wouldn't wish building an L1 on my worst enemy. It's very, very thankless, difficult.
It's the best part, though, the trials and tribulations. That's exactly what.
You learn a lot,
Yeah.
better, you improve. And I'm really blown away with our community. We have a weekly call around tokenomics guidance, and 100+ organizations show up regularly, and it's a really
So cool.
tight-knit group. And so it's just, I really want to start telling your stories.
Yeah.
I'm the most excited.
It's like your kid's finally graduating.
It
And you're
definitely,
pushing them out into the real world, and they're like, let's see if we did a good enough job.
absolutely, I'm looking for.
Well, is there anything else specific to Canton that you want to let our audience know? And one of the things that I'm keen to know is definitely listing dates and when this thing goes from private chain to private interoperable with more public-facing chain to actually publicly available for trading, and people can actually have some ownership in this.
Listed today, I'm probably going to get the list wrong, but it's today on Bybit, Gate, Mexi, KuCoin, and I'm sure Crapper, of course. And all of them were fantastic to work with through the listing process. There are a lot more things coming online over the next few weeks. Everyone has been a really strong partner in this process. Futures are actively listed and Corps are actively listed across more exchanges than what I just described in that group there. It'll be available in an increasing number of venues around the world as we go.
That's exciting. I know that's an absolute pain in the ass dealing with those guys.
No, honestly, they've been great. People worked really, really hard to make it happen. Anyone that has made the commitment to come to the ecosystem has been a dream to work with, and everyone's been really good. So listing is live in many venues and improving over the coming weeks. But yeah, I mean that's just going to continue to grow. Wallet access is going to continue to grow.
Yep.
General access is just going to continue to grow.
How has it been received from a DX developer experience standpoint? Because
Yeah,
I'm not unaware of the difficulty and intricacies that you guys have schemed up.
Okay, so first I'll be defensive, but then I'll answer the question directly. So I always try to tell this in the context of like Solana. It was a new ecosystem. It wasn't EVM, and people chafed at that. And Rust is a bigger developer ecosystem than Solidity, but still people chafed at it. I think really what people were having difficulty with in that instance was the new feature of fast and cheap. And so there are some inherent complexities in Canton because of privacy. And normally I'd query the database. I see everything in the database. It's a pretty jarring experience to query many databases and still only get a partial view of what's in there because of how the asymmetric views work in the system. So I think a lot of the learning curve comes from the inherent complexity of segmenting data and privacy. Now, once you kind of get over that, then there's the checking against, okay, well, this is a different language paradigm, it's functional, etc. And once you get past that, we find a lot of people that are like, wow, this is actually really nice because there's a lot of tooling, a lot of protection, a lot of safety in there. But still, you have to get through the first two passes to get there. There are people very actively working on EVM support for the ecosystems. And we have done, I think, as a foundation and a community, a really good job of putting the constraints on them that it would be natively composable with everything else in the network. So if they pull that off, then that'll won't obviate the first problem around the privacy feature, but it'll make the language a little bit more familiar for people.
Yeah, that's interesting. And on the language and development side, and if anything you use, be it physical product or digital, if it's purpose built and you're not using it for the purpose, then of course it's going to look complex and difficult. But once you know the purpose and you're in there, it tends to make sense because of course it does, because it's very specific.
Yeah, I mean, DAML is, DAML and Canton are the opposite sides of the same coin. We started with a definition of what is a global, horizontally scalable, interoperable network, and then Canton is the implementation of the protocol, and DAML is the implementation of the language to build apps for that protocol. But it started with that definition first and foremost.
Well, cool, man. This was very educational. I'm super excited about how excited everybody else is, as well as just for what you guys are building, because it marks a pretty massive turning point in the entire crypto ecosystem. And somebody had to do it, and you guys took your time doing it. But I hope that means that it's a hardened and steadfast product, or at least layer, to be built upon. And this should get very interesting very quickly as we see this revolution or renaissance come to fruition in the world's largest financial markets.
And thank you for all the support from BitGo. I mean, we've had a few of our really big customers rotate in a hurry into BitGo custody support. It's great to have you guys as pro.
Yeah, we're excited. This has been another episode from The Vault, a BitGo podcast, where we were joined by the wonderful Eric of Canton. Thank you guys so much for listening.